Started. So today is Monday, February 10th. This is the 12:30 section. This is being recorded. So today, I really want to focus on two things. One, we're going to spend a few minutes going over your EIC homework assignment. And two of your TAs are here, Ashley and Megan, and they're going to give you some tips and tricks on the Bloomberg Trading Challenge. And also, since they're graders, if you have any other questions about that, feel free to address that questions while they're here today. Okay. And then I'm going to give you some time to work on the next two assignments. Posted an edit to the next EIC assignment homework, which is due next Monday. Individually, that's going to be an Estee Lauder. And then next Wednesday is your first group team presentation on EIC, which is going to be on Intel and semiconductor industry. So coming up very, very quickly. All right. And we will give you a little time today to work on gathering the data for Estee Lauder because, as you probably checked the weather forecast, we are expecting snow Tuesday, Wednesday, and there is a probability that the school will close and not have classes. In that case, I'm going to strongly recommend to use the time I'm giving you today to get your data. I'm not going to give any snow-related extensions for next Monday. All right. So basically, get the data for Estee Lauder before you leave class today. All right. All right. So the other thing I want to quickly check in on is the Bloomberg Trading Challenge. So TMSG. Make sure you select your section. It says 201. You have until the end of today to be less than $300,000 in cash. Great news. Everybody's below that threshold. Okay, so thank you for making some of those trades already. Over on the left, by the end of the semester, or the first half of the semester, you need 10 longs. The majority of teams have actually exceeded that threshold. You have a few more weeks to get to 10 longs, but you need to have at least 10. And again, you're going to be scored on portfolio value. Right now, 4 of the teams in this section are in the black, 2 are in the red. But again, 1 is in the red. But again, it matters not where you are today, but where you are when the first half trading challenge ends in about a month. All right. So any general questions about this so far? All right. Again, thank you for starting the trading challenge and off to the races. Again, your TAs here today will kind of give you some tips and tricks about this, particularly because they were in your shoes last semester in the trading challenge as well. I'm going to talk to you about how you can also use Bloomberg to help. So before we do that, I want to talk about your EIC assignment. Today, we did it on Chipotle. Okay. So what you should have done with Chipotle is CMG US Equity, your first screenshot, RV. Make sure you use BICS, whole firm, default to country of domicile. And you would have gone to markets, beta. All right. So the first thing you would have done, taking and submitting the screenshot, is you have talked about the industry E. So specifically, the 0.77 raw beta for the fast casual industry. Okay. And then referring to that, you'd have said that that suggests that the fast casual industry is slightly less sensitive, 0.77 versus 1, than the S&P 500. All right. So the question is why? All right. So first you identify the data point, and then you have to explain the data point. So why is fast casual a little less sensitive? All right. And I think it is because of the fact that for consumers, there's a function of convenience and lower cost compared to other alternatives, which again, when we get to tougher times, people tend to trade down from higher end food to fast casual. And when we go to better times, people tend to trade up to the other markets. Now, that's just one thing you could have said. But again, looking through all the data points, you have to at least explain why do you think this industry is slightly less economically sensitive. Okay. Then you talk about the company, in this case, Chipotle. Chipotle has a raw beta of 0.80 versus the industry 0.77. So again, Chipotle is still kind of like the industry, less sensitive than the average company, but slightly more sensitive than the average fast casual company. So why? Why is Chipotle a little bit more higher beta than their industry? And I think that has to do with Chipotle's pricing, right? They tend to be a little bit more on the premium side to fast casual, and that makes them a little bit probably more sensitive than some of the other fast casual, though their beta is still less than one, right? Now you could have said different things. Matter of fact, anybody say additional to what I just mentioned? All right. If you don't want to share in class, that's okay. Your TAs are going to give you grading feedback very soon on this. But again, now's a good chance to ask questions as we go through this. But again, you have to explain the data that you see. All right, next, you would move on to the eye, right? And then from here, you would do your second screenshot. So you would go to custom and you would load your spread template. And right now, the industry spread is an industry ROIC of loading. There's 22.5% ROIC against about a 7.96% WACC, right? Giving a positive spread of about 12.5 points. You got to use numbers. And the whole point of the current five forces, explain that spread. Okay. So in the context of the five forces, why is this such an attractive industry today? Right. And I think a few things. Number one, barriers to entry. Right. The barriers to entry to creating a national fast food, fast casual brand are actually relatively high. Right. A lot of restaurants, a lot of capital, a lot of investment. Right. That's why you tend to see it more of an oligopoly against the top firms. Number two, another barrier to entry, to some degree, brand, right? McDonald's, Chipotle, others have very strong brands. And I think that tends to give the industry slightly advantage with barriers to entry because you don't see people quickly switching to other food. Matter of fact, I would suggest you think about your own personal experience over the last month or so. And if you went to fast casual, I bet you go to the same places, right? You're generally not going to lots of different places. People tend to be fairly loyal to the brands, and that also does two things. Number one, it tends to make the barriers to entry a little higher. It's harder to displace some of those firms. And number two, tends to reduce a little bit of the rivalry, right? Which both are favorable, the rivalry and the barriers to entry, to this industry spread. Okay. Back to the rivalry, these firms generally not competing on price. Okay. They tend to compete on their menu items, less so than price, and that tends to help the favorability of the industry. Not saying there's not competition, but I'm saying it's not intense, cutthroat, race to the bottom, lowering prices as much as possible, and that has been more favorable to the industry. Okay. Now, one force that's been working against the industry is supplier power. Right? They're all experiencing inflation in their supply chains, right? From meat, chicken, eggs, etc. That's still been persistently high, and that has worked against the industry. Now, given their current spreads, not enough to drive the industry into poor performance, but nonetheless, that force has been a little bit unfavorable recently. Okay. When we think about substitutes, this industry has substitutes, right? Amongst them, eating at home, right? You don't have to go out to these fast casual restaurants, right? You could also go, for example, to Safeway and grocery stores, which have delis to beat competition, and the higher end restaurants, right, are potential substitutes. Now, in today's market, price sensitive to consumers, people have probably traded more down from the higher end restaurants, but they still value convenience. So yes, the substitutes matter, but not enough to really hurt the industry today. Okay. And if you think about buyer power, we clearly have buyer power, but right now we don't seem to be exercising it. Okay. Now we're exercising around the margins. For example, McDonald's just reported lower same store sales because people are complaining about how expensive McDonald's has become, but they're still going. Okay. And that's the point. We value convenience, and that has offset our buyer power, and this industry is still doing fairly well. So if you think about the forces, you could argue the buyer power is slightly favorable, right? You could argue that the substitutes are slightly favorable. You could argue that the barriers to entry are very favorable. And you could argue that the rivalry has been favorable, and that's more than offset the power of suppliers when that's giving the industry a higher spread. Okay. But that's the point. You got to explain what you see. Did anybody else add to that? And by the way, as you're talking about this, should have gone to Bloomberg. And if I think about Chipotle, first, should have perused the BICO, because that's where some of these issues are going to come out. And as you peruse the BICO, what you're going to see is that marketing and digital are becoming important. In fact, one of the things Chipotle has been doing is opening up a bunch of digital stores. And so the idea is they don't have in-store restaurants. Actually, I have one in Silver Spring. Okay. So it's for DoorDash, Uber Eats to pick up, and for people to go through drive-throughs alone. So that it's much smaller footprint, much more operationally efficient stores trying to low cost. Okay. I don't think Chipotle is the only one. The other thing you start to see is that menu items are important. In fact, one of the things we start to think about C is for Chipotle is that the food that they offer is becoming more appealing to consumers. I think that is giving them slight advantage and taking share away from some of the other firms. Operational efficiency that they are focusing on, same store sales growth, which is important in the industry, average check size going up, more store development as the industry is trying to grow. And then if you go over here, you can see some of the industry dynamics. And so one of the things that you see is that same store sales are expected to improve as particularly the economy stays fairly strong, and that has benefited the industry. More money in the economy, more availability to spend on fast casual food. Now, if we start heading into recession, that could be something in the future that might impact the industry in a negative way. But right now, the economy has been pretty healthy, and despite the low beta, has tended to help the industry itself. Okay. So key issues for the industry, same store sales, performance on service marketing, value fuel. Okay, so some of the supply chain inputs, and the amount of discounting. Okay, because if the industry starts discounting more, that would tend to reduce the margins in the future. Right now, we've seen some of it, but it's not dramatic in the industry, not enough to currently offset the current high spreads of the industry. It's also says a gap between the winners and losers. Interpretation, size matters. Size and brand of the bigger companies definitely is benefiting that. We talked about that in barriers to entry. So again, I'm kind of going backwards, meaning you should have been looking through this first and then addressing this, including going through the VBIC reports. But the idea is when you're explaining the spread, you got to put it in real world context, whether it's the E, the I, or the C. All right, major ones here. Questions. Questions about the current I. All right, then you're going to do future I. What do you think is going to happen with these forces in 5 years? Now, here, it's a little bit of an opinion. Okay, context-based opinion, right? My personal view is that number one, I think supplier power is going to get a little bit more favorable over time. I think inflation is going to get tamed, and some of those input costs are going to start benefiting the industry, and the input suppliers don't have a lot of power over the industry. It's a commodity business, right? Number two, I think that the barriers will still remain strong, although somebody talked about in the last class, he talked about ghost kitchens, but some of the smaller, low-cost alternatives are starting to encroach upon their business, particularly in local markets. That might lower some of the barriers to entry. And as we start to become more price sensitive, a little bit less brand conscious, right? We also might see some additional rivalry over time because the market's not growing as quickly. Then an assumption might be that price starts to become more of a differentiator. We're already starting to see some of that discounting. That might put some pressure on margins of these firms longer term. We might also see substitutes start to play more of a role at going after fast casual over time. And in terms of buyer power, that gives us more buyer power, and we might start exercising a little bit more. Now, this is all incremental. I still think the spreads are going to be very high, probably just a little less high than they are today. Okay, but that's the whole idea. You got to explain what is going to happen to each of the forces and why. Why did you think that? And then what is going to be the impact on the spread? Now, by the way, because we're talking about the future, you could have a slightly different view. You could make an argument that no, where I'm saying that the spread's going to go down a little bit because the forces are more unfavorable. You're like, no, I think that the forces are going to stay pretty strong. I don't think we're going to change buyer power. I don't think we're going to change what's happening with rivalry. I don't think we're going to change what's happening with substitutes. And the industry is going to maintain this level of spread. That also could get a reasonable grade, right? Because when we deal with the future, you got to put your opinion in. This is a little bit of a process question on what you think it would be, fact-based. But nonetheless, you can actually have slightly different answers than what I said, and your TAs can still give you credit for that. The other point that's very important, and I don't know what professor confused some students in previous classes. When you do industry, it's not about the company. Industry is about the industry. It's not about Chipotle. You don't do a 5 forces on Chipotle. You do a 5 forces of the fast casual industry. Okay. C is where you talk about the individual company. Okay. That starts with the company spread. So if I go back here, same chart. Chipotle's ROIC last year was 18.94% against an 8.5% ROIC. The industry at 22.5 versus about an 8% WACC. And that is a worse spread than the industry. Industry spread's about 12 points. Chipotle spread is right around 10. Okay. So with that lower spread, they're not demonstrating competitive advantage. Right. Chipotle right now seems to be doing well because they're in a good industry, fast casual, but they're not really outperforming. Okay. So they don't really demonstrate competitive advantage despite what they are doing. Okay. Now they're doing some things that are helping them, as we just talked about. They're focusing on efficiency. They're focusing on menu differentiation, right? They're focusing on some, growth of their stores. That's helping them, but not enough to say outperforming the industry today, right? And they might still have some lingering effects of some food quality issues a number of years ago, which might be on consumers' minds. In terms of 5 years, will any of that change? Well, if you believe that Chipotle's growth of digital, right, their growth of the efficiency of the units, particularly more smaller units growing more quickly, that actually might improve their margins and returns over time. And so they either get back to industry average spread or slightly above, and relative to where they are today, improve their position, right? That would be my opinion. You might say no, that they're not going to do that. They might stay below average, and here's the reason why. But you got to have some context about the C and why you think it's going to be. Did anybody else add anything or want to share your thoughts on Chipotle or the industry? Yes.
Impact them, especially because like avocado.
Chipotle or the whole industry? Okay.
And an article explained that the CEO was talking about how they diversify their supply chains within.
Okay. But net was your opinion that that's more unfavorable to them over time?
Or favorable because they diversify.
Okay. All right, but again, I think it's a good call out because, their menu is driven by, Tex-Mex type food. Ultimately, avocado is a big part of the menu. Tariffs will affect that. That's a good macro issue as well as a good, company and industry issue. So good call out for that. What else? Anybody want to add something? Yes.
About how consumers are like trending towards healthy eating and like conscious eating, and Chipotle really advertises like a fresh ingredients that help them.
Yeah, so getting away from the highly processed type food and more favorable fast casual, although I don't know if any fast casual food's good for you, but less bad as we have more healthy lifestyles, and that should benefit them on the seaside compared to the industry. Yes. Yeah, so expanding on what he said about avocados, this tariffs might actually affect not just Chipotle, but it could be an industry issue. So you could put in the five forces and or the impacts on Chipotle. Okay, great. What else?
Yeah, I bouncing off that like fresh comment that she had. In Ibis World, it said that they talked about the buyers or the supplier bargaining power, and if Chipotle only like getting fresh food, it really makes the bargaining power go up because they can't just buy from like what
Bargaining power for the suppliers.
Yeah,
So it limits their
Yeah.
bargaining power.
yeah, because if they're only buying fresh foods, that like another niche like what suppliers they can do.
Yeah. And that could impact them more. Could also explain why their margins are a little bit less than some of their peers. Great call out as well. Anybody else want to share something? All right, but this is exactly what I'm talking about. Like putting in the business context, kind of making interpretation and an explanation of how it affects the current position and whether or not this is going to change over time. A little bit more blurry and multiple answers in terms of how it's changing over the time, but that's the point. We want to talk about that, and you have to give your opinion as part of this class. And what's going to be graded is now if you have some crazy opinion has nothing to do with facts, all right, that TAs are not going to have any mercy on you. But as I said, there could be disagreement because we're talking about the future. So you kind of support that reasonably. That's what we're talking about. Because you go to Analyst Today, just as an FYI, for Chipotle, you'll see then the buy, sell, hold opinions, 25 buys, 10 holds, 1 sell. There's not unanimity about the future today, even by the professionals, right? And so that's not what we're trying to teach. This isn't all about all coming up with one elegant answer because we get the future a little bit more uncertain. All right, questions about your EIC assignment? All right, so next week, Monday, your next EIC, I changed the company this morning. It's Estee Lauder, right? Cosmetics company. That is your company. That is your industry. Okay. Next Wednesday, group project EIC, 10-minute presentations. You'll decide who's presenting, similar to what you put in the paper, just in PowerPoint and same screenshots. That's going to be on Intel and semiconductors. Okay, so that's what's coming up very quickly. But what I want to give you guys some time today is I'm going to turn this over to your TAs and let them talk to you about the trading challenge and just some tips and tricks for that. All right. So who's going first? All you
Go up.
together? Yep. And then just kind of look towards the camera for the recording. And while they're doing that, I am going to pass out the attendance sheet. So again, make sure you sign this before you leave today.
Right, so hi everyone. Just a little reminder, I'm Ashley Leedy. I'm the TA for this section.
Hi guys, sorry I'm losing my voice a little, but my name's Meg. I'm the TA for the 11 a.m. section.
Yeah, so just an overview, like rehashing the rules of the trading challenge. Each team must make a minimum of 10 long trades before EOD today, which EOD is 4 p.m., I believe, right?
Yeah.
Yeah, so 4 p.m. And then teams also need to keep less than $300,000 in cash into their accounts. And then no more than $200,000 can be invested in any single stock, which means you need to have a diversified portfolio. So,
Okay, and with those instructions, yes.
15 long trades today.
yes, right?
Oh,
By the
Well,
By the end of 6 weeks.
by the yes. So the 10 long trades are just the requirement for the trading challenge, so you need to have 10 logs in the account at all times.
Actually, by the end of 6 weeks.
By the end of the 6 weeks?
End of
Okay,
6 weeks.
okay,
So if you have 9 today, you're okay. Just gotta get it.
okay. Yes.
Okay, so with that, we're just going to give you some strategies we use with our groups and also some resources you can use within Bloomberg. So first I give in would be buy low and sell high. I know you guys probably all know this, but just starting it off. And then something my group also did was consider economic and political factors. Stock prices react to the news, so staying informed about macroeconomic trends helped us make better decisions. I know I took this last semester and the election was going on. So, kind of anticipating who was going to win the election and what stocks were going to be affected kind of helped us do much better in our second half, actually considering politics and the election and all of that. So, definitely, we're going to show you resources to look into the research and news because that should definitely help you make informed decisions. We also tracked stock gainers. So we checked, in addition to Bloomberg, you can even go on Yahoo Finance. They have a tab literally called like gainers. So you can see who's like really up and coming, maybe stocks you never even knew about. So you can look there to see stocks that have momentum. And then another thing I did was focus on earnings reports. This is a 6-week short time period. So it's really important that those earning reports can really change a stock. So if you want to look for one that's coming up in a couple days that can hopefully is anticipating, good earnings back, and we'll show you resources that can help you anticipate that, then you might want to invest in those. So hopefully you do really well by the end of the 6 weeks.
And then there are also some Bloomberg functions that we thought would be helpful when you're looking for what stocks to trade or just what decisions you want to make with the Bloomberg Trading Challenge. So obviously you guys have all heard of BICO. It's a very good resource if you want to see company overviews. It provides some financial data and just company fundamentals and changes that are happening to those companies. And then
This is BICO.
yeah, this is BICO. And then another thing, also news, it's TREN. It's trending news and it shows the most relevant financial news and things that are happening in any markets. So yes, and you can see that these are articles that are coming out pretty quickly and some big financial decisions that are being made. Another one is BRC, which is the company research page. Okay. And it has just has analyst reports, ratings, and insights for a single company. And then you can see that some analysts from, let's say, JP Morgan have a rating to hold a specific stock. Deutsche Bank says to buy. So it's just aggregating a bunch of financial analyst reports and showing what they would recommend that someone do at this present moment. And then FA is financial analysis. And this is where you're going to find financial statements and ratios to kind of see what the company is doing and just looking at their fundamentals. Yeah, so this for Chipotle, we're just looking at some, net income is there, EBIT is there. So you're seeing if they're making money, if they're losing money over in the past, and what projections might look like for the future. Okay, so moving on to market events and earnings. Something that's pretty useful is the EVT, it's the events calendar. And then this will just show some upcoming earnings reports, dividends, and investor calls, which is very important because, you don't want to, you want to stay updated on when these earning calls come out. And especially since this challenge is over such a short period of time, you're not going to be able to really hold things. You're going to have to trade pretty actively. So knowing when these dates are is very crucial. And then another one is, this is a long one.
Yeah, you can just earnings preview.
So yeah, the earnings preview. And then this is going to offer insights on expected earnings, analyst estimates, and potential stock price reactions. So yeah, this is updating pretty quickly, as you guys see already. And it also gives you the opportunity to see if you've invested in a company that's predicted to report lower earnings, so you can sell higher. And then next is equity screening. It's EQS, and that helps find stocks that meet specific criteria, like high expected earnings growth. Yeah, so if you're looking for something more specific, then you would use EQS. And then portfolio analysis is pretty good for tracking, performance, looking at risk, and making sure that your team stay diversified while still meeting the competition rules. What?
Nothing.
Okay, yeah. And then, yeah, so you can see, it just looks at more the performance of the company, and it gives you some charts to kind of like visualize what you're looking at. And then GP, which is graph price, it kind of visualizes it again, and it helps you identify some technical patterns and some buy sell opportunities that, are a little bit more easy to look at than just numbers on the page.
And with this, you can also click on moving averages just so you can get these lines to help you see those patterns.
Yes. And then one of the more useful ones I will say for the Bloomberg Trading Challenge is RV, which is relative valuation. And then it just compares a company's valuation metrics to industry, like other companies in the industry, to find undervalued opportunities. So we've used this already, but it just really helps kind of see how, Chipotle, for example, is performing against some peers in the industry. And then the last one is the World Equity Index, or WEI, and it gives a pretty good overview of some global market trends and economic indicators that might affect stock movements. If you wanted to move beyond the US, you could see what companies are maybe up and coming or emerging in other countries as well. So these tools, you don't need to use everything. Obviously, these are just supposed to help you in trying to make educated and well thought out decisions when you're choosing your stocks for the Bloomberg Trading Challenge. Does anyone have any questions or want me to go back on anything?
We'll also send out an announcement with some more resources as well, which also includes these. So you'll be able to see them in there too.
And is there any question about the trading challenge in general?
Great. Any questions on homeworks or anything while we're here as well?
Okay, so for the remainder of class, you guys can work with your groups to kind of make your decisions about the Bloomberg Trading Challenge if you haven't already. Professor, did you have anything else to say?
Other questions for TAs while we're here?
We can also walk around if you feel more comfortable asking within your groups, but
One of the questions that came from the last class is just your personal things, like how did you, from a team perspective, lessons learned, just individually?
It definitely is easier to just make decisions as a group. We kind of noticed that when one person is kind of going to the lab, making the trades on their own, we're not really communicating that well, and it's just really disorganized, and no one really knows what's going on with their team. And then all of a sudden, if you see your team at the bottom, you're going to be pretty confused. So just taking the time in class, maybe after class or before, to kind of meet with your team, go over maybe like 1 or 2 trades that you're going to make that day. It doesn't need to be too big. Just working together and making a collective decision to trade or sell, long, short, whatever.
yeah, I said, the last class, and I'll say to you guys, but my experience was we were kind of just investing in stocks we have heard of or like companies we liked, whether that be Starbucks, Chipotle, Abercrombie, instead of really like actually looking into their current trends. And we weren't anticipating their earnings reports, whether they were going to end up being too low or high. So anticipating when those are coming, and if they're going to be low, sell while you have it high. Those simple rules that you don't always like remember, but definitely keep those in mind.
And definitely do stay updated with the news. I recommend Wall Street Journal. Provides pretty like accurate news. And I mean, it covers a lot of trending financial changes that are happening. And with companies changing with, you know, the new presidency and the new, like, I guess, government, it's everything is kind of up in the air. So it's very important to kind of keep an eye on everything.
In the browser, was that the document you shared with me?
Oh,
For that?
and in the browser. Oh, yeah. So yeah, if you wanted to take a picture, these are kind of the resources that we talked about.
Can you share that with them?
Yeah, we can include this in the announcement. Yeah.
All right, well, great job. Thank you very much for those valuable tips and tricks. So again, as they suggested, we're gonna kind of give you more time today to talk to your teams about the trading challenge and how you want to work together. Also, just because of the potential snow day on Wednesday, to use some time to get some additional data for these assignments. All right, so we're around here if you have any other questions, but otherwise, good luck. And don't forget to sign the sheet before you leave today. Thank you.